I'm going to go over 3 stocks to buy now that will make millionaires in 2025. I'm going to dive deep into exactly where and why I'm getting into these stocks, and I'm adding more to the portfolio. But first, let's go ahead and dive into it. As you can see, the portfolio is at 941,000. Let's hit the refresh button to make sure we are pretty accurate here. Yeah, 941,000, a new record all-time high in the portfolio. Thanks to some hood leaps that we got into, but I wasn't the only one who profited on these. As you can see here in my mentorship, Options Trading University, we had clients profiting. Chuck, $3,497. This client, $1,655 in profit. This client, $14,900 in profit. And Chad, $8,254 in profit from those Robinhood leaps that I put specifically in my leaps entry and exit channel. So if you want access to those trades, then click that very first link down below in the description to get grandfathered into lifetime access, as I will be closing that down on June 1st. So make sure to book a call. Now let's go ahead and dive into the markets, and then we'll dive into the 3 stocks. Okay, so next week, big catalyst on Wednesday after the close, Nvidia reports earnings. I think that this will be the crucial moment to push NASDAQ back up to previous all-time highs. And I think that's going to happen. That's my prediction. And we'll call it out now. So I do think Nvidia earnings will be positive, and it will push the market back up to previous all-time highs, probably next week or into the following week after that. So that's going to be a big one going into there. United Healthcare, a lot of people have been asking me, is this a right time to buy a Leaps call option on the stock? Right now, UNH is facing a lot of scrutiny and a lot of things that are looking pretty shady for the stock. So it's not, I would say, definitely not a Leaps call option buying opportunity, especially counter trend. This stock is going down while the market's going up. But there is a lot of premium to be collected if you do want to sell some very far out 15 to 20 delta cash secured puts, and you like the company long term and you think that they will get through this. But yeah, United Healthcare falls after a report that it secretly paid nursing homes to reduce hospital transfers, down about 4.71% today. So not looking very good for the company. I won't be participating, but there is a lot of premium in those options. Now, if we look at the CME FedWatch tool, this tool right here shows you basically the prediction of rate cuts. And right now, the rate cut that we were supposed to get in July got pushed out to September, okay? 78% chance in September. So the cuts are still coming, but there's less of them, and they're getting pushed out a little bit further. So September and December, 2 rate cuts this year being priced in, and 2 next year. So just keep an eye on that. We still are getting rate cuts, which is good for the markets, good for business, consumers, right? People can borrow at cheaper rates, businesses can borrow at cheaper rates, and more money will be flooding into the markets. So we do want to see continuous rate cuts, but just keep a close eye on that. Also, what's telling me in this market that risk is on is, number one, Bitcoin is making new all-time highs, okay? So Bitcoin is very correlated with the NASDAQ. Of course, during this last crash, Bitcoin definitely decoupled from the NASDAQ and was performing stronger. But right now, Bitcoin is very closely tied to the NASDAQ. So we could see Bitcoin making new all-time highs, fresh money's coming in, and risk is back on, right? Risk is back on. So let's talk about QQQ, the levels, and then we'll get into the 3 stocks. But as you can see, QQQ is really bouncing off this 522 area. And once we breach this, I think, we're going to make our way back up to 540. I think that's kind of the run there. So really what I want to see is Nvidia earnings come in positive, and that will just help propel this market forward, up to that 540 level. If you look at the volume bars down here, it's just been buyers on buyers, green, 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 green the whole week, trending above the 20-day moving average on the volume. MACD is looking strong. RSI is a little bit overbought, but we could have majorly overbought areas like this, which we aren't seeing yet. Okay, so I do expect us to see kind of a similar to last year, right? Similar to last year. It's not the buy, sell in May, go away, but actually buy until July. I think that will be what's going to happen. So we could see QQQ hit new all-time highs in the next 3 to 6 weeks, somewhere in that range. And that's kind of my play here, okay? We saw a massive crash. VIX spiked all the way up to 60, okay, which we haven't seen since August 5th, 2024. And then the previous to that wasn't even in 2022, but it was actually during the 2020 COVID crash. So yeah, we're basically in recovery mode from that. And usually what you see is a rally, and we're seeing a V-shaped recovery back to all-time highs, okay? So that's kind of the expectation there. I'm not a perma bull or anything like that. I just kind of trade with where the VIX is, at, and where the VIX is showing fear. And right now, fear is subsiding substantially. There still is slight levels of fear, right? We're at 18, so we're not at lows on the VIX. Lows would be, below 15, but we are seeing subsiding fear, all right? And we're in this level where if you get down below 20, we're kind of in this zone of confidence. We're trading in the zone of confidence and greed. And when greed starts picking up, usually it just keeps exponentially compounding, right? And that's kind of what I'm expecting VIX to kind of trend down here. Sub 15, maybe even get as low as 12, and then maybe we see a huge VIX spike to 25, okay? So, that's kind of what I've been playing for the past week, actually the past several weeks during this crash. So that's kind of the expectation here. I'm not really seeing any signs of, potential news or anything, but we are about 41 days into the 90-day tariff pause with China. So we will see it maybe in the next 2 months, how that plays out. And maybe the VIX spike will happen sometime in mid-July or even August, and maybe the market kind of corrects from there. So, just be ready and taking off cash as the VIX gets lower and lower. Right now, you could be about 75% invested, VIX between 15 and 20, but once VIX goes below 15, that's when you want to start taking some serious cash off the table and having it just ready to go as dry powder for the next VIX spike. So that is something I always talk about, because a lot of people that talk about trading and investing on YouTube don't actually talk about cash allocation. It's always like be 100% in, and then when the market does this, when VIX is low and the VIX spikes and the market crashes, right? Well, now you don't have any cash to take advantage of the opportunity. So that's why I always talk about this, and that's why my portfolio is at record all-time highs, even though QQQ hasn't even recovered, okay? So before we get into it, if you do want to make multiple six figures trading options, make sure to click that first link down below. If you want to watch some of our most recent testimonials, Sean made 79,000 profit in 26 days of joining, right? A noob, 30% gain within the first week. Like, we have tons of client testimonials here that you can watch of our clients having massive success. We have 110 high-level investors in our mastermind. So if you want lifetime access, you'll be grandfathered in if you book a call before June 1st, okay? Also, if you want my free trade ideas, make sure to be following my Instagram and my free newsletter, both down below in the description. But let's go ahead and jump into it. The very first stock is Nvidia, okay? Obviously, this thing is making new all-time highs, or not all-time highs, but new highs since the crash, okay? 137, it's up 2% today, kind of breaking out a little bit here, looking way stronger than the market, all right? TD Cowen predicts Nvidia's AI chip revenue will rise from $100 billion in 2024 to $262 billion by 2030, with a 90% market share in the GPUs as the market grows, okay? PE ratio is 46, which is extremely low from what we've seen Nvidia trading at. Last year it was trading as high as 73. So this is still a massive discount on the company. Look at the net margins, keeps continuing to go up every quarter, 56% last quarter. I mean, where do you get that type of margin on a high flyer, AI company? This is crazy. So, I love seeing this. Financials look great, PE looks great, and the chart looks pretty phenomenal here as far as we broke out of this long-term downtrend from January. Okay, and now we're kind of consolidating in this phase, kind of breaking out actually right here, okay? So we're breaking out, and next Wednesday, this thing could really gap up. This thing could really gap up as long as it doesn't gap up prior to earnings because of, the anticipation of good earnings. But I do believe that this thing will gap up and potentially head back up to this 152 area, right? And if we hit 152 very fast, like on great phenomenal earnings, maybe there's some sellers up there, because I'm sure there was a lot of buyers back here and back here that are waiting to get out, right? It's been quite a while that they've been in. And in fact, I'm one of those people with some leaps that I bought, at horrible timing. I wasn't following my rules. Bollinger Bands were, the stock was trading near upper Bollinger Band. VIX was probably at 15 or below. And I'm waiting to get out of those. And if we do hit this level, I'll be in profit and probably get out. But I do think we'll get up to this level, maybe have a nice little bounce from there down, and then maybe breach back up. Okay, so that's kind of the anticipation there. But how I'm playing Nvidia, let's go ahead and take a look at the account, okay? Because this is obviously, I don't want to steer you in the wrong direction. I want to make sure you have the safest play, but you're able to participate and make good money. So as you can see, I currently have some Leaps call options. All right, I've had these since January. There's still 212 days left. I was absolutely wrong, but because I have time to get it right, I think I will be right. Only down 14% on these now. And if we do hit, mid 140s, 150, I'll definitely be in profit and I'll close these out. So these are the ones I have, but I do have some 120 puts that are, up 33% in premium. And I think that was a safe play. But let's go ahead and dive into it, okay? So let's go to the options chain. And how I would play it, right? I'd probably go out, really you could go to the week of expiration to take advantage of that higher implied volatility, or you just go out 30 days, okay? 30 days, and you go to the, 30 to 35 delta if you want to be aggressive. Now, if you're very bullish here, you're like, hey, Nvidia is not going back down to 130, right? Then just pick up the 132s, go 36 delta, and collect 510 bucks. Let's do the math on that. So 510 divided by 130, what is that? 132. All right, that's going to be a 3.8% return in 30 days. All right. Sure, you may miss the huge up move if there's an up move, right? If there's not and Nvidia stays at this level, well, you're glad you just made the for sure money 3.8% versus 0 on a Leaps, right? And that's why this is going to be a safer play, okay? Because if you replicate this, every month, right? That's a 46% return year over year. You're beating the market by 4x, okay? So this is what the type of money that I like to make is consistent for sure money. Now, the downside of a cash secured put is you have to have the collateral to buy 100 shares. So 132, you'd need $13,200 to sell this option, okay? But I do like that. I do like that put option there. So that's going to be the safe play. Now, if you wanted to go risky, right, but you have time on the horizon, you're giving yourself time to be right, you'd go out to the September 18th, 2026, 485 days out, okay, just to give yourself extra time with Nvidia. And you'd buy the 70 delta call option, which is the 125 strike. You'd pay 3,800 bucks versus 13,000 to control 100 shares. Okay, so you're basically controlling 100 shares for a quarter of the cost. Okay, so I like that. I like that strike, and I would do that when Nvidia maybe takes a little bit of a pullback, maybe down to 133, 134. Okay, so you want it to get back into this little tight range here prior to earnings. Okay. So that's going to be the more risky play. Obviously, this is not financial advice and buying call options is not recommended. But if you're bullish and you do want kind of a synthetic stock position and you have time on the horizon, you're fine holding these for a long time, then that could be a good play. Okay. Especially with all the good news coming out with Nvidia. Now, let's go to the next stock. HIMS looking really hot here. It's kind of consolidating, and I do believe that this stock will also make a next leg up to previous all-time highs at $73. So how I'm playing that is I want to play this the safest way possible, right? I love the company. The fundamentals are great. PE ratio is currently at 88, so not bad for a high flyer growth company. But if you take a look at the position, okay, I have $94,700 on the line. So I put my money where my mouth is, but I do it safely and I collect for sure income. So next month I will for sure be collecting, almost $4,000 here, pretty much 4,000 bucks. Okay. And these are safe, 49, 48, 45. So the highest put that I have is at the $49 level, which is going to be right here. Okay. At that middle Bollinger Band. So if it does come all the way down there, right, prior to or during expiration, that's fine. I'm fine getting a sign there because I could ride this thing back up, but it's probably not going to happen. So what I would do right now, if I were to get into HIMS, is for sure a cash secured put. It's nice that this is a lower price stock, so you can, for the 49s, you need 4,900 bucks to collect a really good income. So I would go out, probably 30 days. And I would just go to the, to be safe, you go to the 20 delta or the 25 delta, somewhere around there. Let's just go to the 25 or 24 delta and do the math there. All right, so the 24 delta is the 52 strike. We collect 300 bucks divided by 52. Okay, and you're making 5.7% in a month on your money. Okay, if you did that every month, right, which is very possible on a stock like this, you'd be at compounded monthly, you'd be over 70%, okay, on your money. So if you had 100K throughout the year, if you're doing this, you're making 70 grand on your money. So that's a wonderful play there, very safe, and 52 would be getting you down to basically this level right here, okay? So very safe there. I like HIMS, and I think this stock is gonna make many millionaires this year. My goal is to get a couple 100,000 into this stock eventually when the portfolio, surpasses 1.2 million. So let's go ahead and go into the next stock, and then I'll give a bonus stock, a fourth stock, okay? This one is SoFi. SoFi obviously is having kind of a pullback here. This stock is interest rate sensitive, so because a lot of their customers come from the space where they're refinancing student loans, unfortunately, because the interest rates are still pretty high, that doesn't benefit a stock like this. So this nice pullback is something to take advantage of in anticipation of the next rate cut coming in September. And cash secured puts here are very admirable and something to get into. But also, if you wanted to build like a long-term Leaps core position, you could do that too. But let's go ahead and dive into the position so you can see kind of where I'm at. So SoFi, $86,000 on the line. I have the 12s and the 13s, the puts. And basically what I would do is I'd go out 37 days on these, and I would just go to that 30 delta. So I'd go to the 12 and a half, and let's do the math on that. So you collect 51 bucks divided by 12.5, right? And that's a 4% return on your money, okay? And you, again, doing that annually, 48%, wonderful stock, good PE ratio, right? PE is at 30, and it's a very, very high growth company in the online banking space. So, I think they have the potential to be, let's take a look at their market cap. Market cap's at 14 billion. This stock has easily a 100 to $200 billion potential market cap, okay, as an online bank that is growing rapidly, and they have their own stadium, which is pretty cool here in California. So, yeah, loving this stock, and that's going to get you, 12 and a half will get you down all the way to here for a nice discount. If you do get assigned on that, right, that would be a 4.5% discount from where it's currently trading. So I'm really liking SoFi. Now, the last stock I want to talk about is actually Chewy. So I was looking at the premiums here. This is a stock that I want you to please comment down below if you have experience in this stock or you know a little bit about their background, because I'm going to be doing research this weekend on it for my group, for myself. But this stock is very hot, and it's in a totally different sector, which I love diversification, but it's in the pet food sector. So I'm really liking that, get some diversification in the portfolio. The chart looks great, trending upwards for the past year and a half, right? If we take that, so number one, chart has to be trending upward. That is fitting the bill there. Number two is going to be the fundamentals. So if we take a look at Chewy, which was brought up by a client in our group, 49 PE ratio, that's great. For an online subscription pet company, that's wonderful. Small company, 18 billion. So that's what we like to see, positive earnings, right? And then I'm gonna do more research, obviously, but if we take a look at the ticker and we look at their options chain, we'll just kind of take a look together. They do have earnings coming up. But if we go out 30 days and we calculate, okay, how much can we get on the 30 delta? So we're collecting 151 divided by 41.5, and that's about a 3.6% return on the 30 delta. So lovely stock, great premiums, charts going up, fundamentals are great. Got to do a little bit more research, but please comment down below if you have Chewy in the portfolio or you know about it. So I look forward to seeing you in the next one. If you enjoyed it, please hit the thumbs up to boost this in the algorithm, and I'll see you there. Here's another video you can watch, and take care.